Gold traded bearish yesterday, moved towards 1975 levels and now trading with a retracement at 1986. Important day today. The inflation data coming in from US definitely will bring more volatility. So how to make the most out of gold trading today? Which position you should take? We will see with the help of charts and indicators. And yes, the next update is also going to be released before the inflation data today itself. Watch that as well. And if you're not subscribed to the channel, do subscribe to the channel for latest updates. Let's start. First, let's have a look at the hourly charts. On the hourly chart, see this was the drop here. With the drop, it has retraced towards the 20 period. There is too much of divergence of the price from the 20 period moving average. It is coming close to it, which is right now situated at around 1988 levels. That is the first resistance level for gold. And if you look at the slopes and if you look at the highs here, see it has created higher highs here and higher lows. Eliminate this breakout and it is trading with a retracement. After the drop, this is retracing here. Thus a selling entry in gold is below 1980 levels. If you see the price is below 1980, you have to go for selling gold. We can again look for 1975 and 1972.5 as the first support. Below 1972.5, it is directly going to hit at 1965-66 level. Any point of time, if you see it is staying below 1972.5, 1975 zone, just stay further short for 65-66 level. On the upside, see what it is trying to do. It is trying to retrace. It has formed a good base here. It is trying to reverse. Now, once the prices stays above this zone here, first at 95, 96 and 2000, 2002 and beyond this, see, if gold trades above 2000, 2002 levels, you can say that the bulls will try to pull the prices up and then we can see a reversal rally here. Yes, it can try to reverse, it can try to rally. Now, also, if you observe the hourly charts here, what has happened here, see the drop, retracement, the drop, and it could try to retrace. How high it could retrace? The resistance right now at around 2010, 2020 is very, very strong if it continues on the upside. Stochastic looking down right now. MACD has crossed over at the bottom, trying to trade with divergence, looking upwards as of now. RSI has also come out of the oversold charts. Coming to 2-hour charts. On the 2-hour charts, if you look at similar observation on the 2-hour charts, it is trading with the lower highs, lower lows. The highs there at 1990, 1991 is going to be a greater resistance. And then beyond that, we see as long as 2000, 2002 is not taken, that is going to be the important resistance. Beyond that, certainly we will look forward to 2010. And once 2010 is taken, then only you can say that gold has reversed and it is going to rise. So be careful here. It is going to look upwards. We can look forward to 1990, 1991 zone, and beyond that, certainly more bullishness may prevail. Stochastic rising, MACD. Now see MACD, what it has done, drop, retracement, drop, and the slope is changed here. If it crosses over here, certainly more bullish momentum is going to prevail in gold. Thus it means that first it has to break beyond 1990, 91 zone, then we can look forward to 95, 96, and then 2000, 2002, 3 key levels, and beyond this we will look forward to 2010. So 4 key levels for the day. Yes, the inflation data can take it either which ways, but yes, on the upside, these are the resistances. RSI is oversold, trying to come out of the oversold levels. Coming to 3-hour, likewise on the 3-hour chart, see 50 period and 100 period moving averages are crossing over here. 20 period sitting at 2000 levels, certainly a greater resistance here. And now the prices are retracing. After the drop, it is retracing. It is not a vertical rise, it is a gradual rise. Thus I will call it as a retracement. How far it can try to rise, see, we will wait for it to break first beyond 1990, 1991 zone. Beyond this, yes, there will be further bullish momentum. Then, as I said, 95, 96, 2000, 2002, 3 key levels it needs to break past by. On the downside, yes, below 1980, you can say that the prices are reversing, and below 1980s again, we can look forward to 1975, 1972.5, the first zone, and below 1972.5, it is going to hit 65, 67 zone. Stochastic rising from the oversold. MACD is bearish, trying to converge. RSI is oversold, trying to come out of the oversold levels. Coming to 4 on the 4-hour charts, after a month, almost these moving averages have crossed over here. These are the bearish sign. The chances of a retracement exist, but if you notice the movement here, drop, retracement, minor greener candles here, then drop, and a minor greener candle here, then drop, and it is retracing again. Now, if you look at this, could be the reversal sign here after the downtrend. How far it could reverse? See the critical levels on the upside on the 4-hour charts is 20, 35, 40. As long as these levels are not taken, it is just a retracement and possibly prices could reverse again. But right, it is looking upwards, and the levels at 20, 35, 20, 40 itself are far away right now. In fact, as we discussed, the reversal sign, first greener candle, I will wait for the next candle. If next candle tries to take it above 2000, certainly you can say that it is a complete reversal. Stochastic was oversold, trying to come out of the oversold levels. MACD is trading bearish, trying to converge a bit here. And if you see this drop, retracement, drop, and it is trading with divergence, this could converge, crossover, and continue to rise from here. Yes, for the recent time frames, this is the lower levels for MACD, and possibly from these levels, there should be a little reversal on the upside. RSI hitting at the bottom. Now, on the daily charts, before we look into the daily charts, if you want to learn this art of trading, you can join my mentorship batch. 28 batches announced. You can be part of it. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, if you want to trade as per the signals, you can join my signals channel on Telegram. And yes, we have started a weekly webinar series where every Sunday we discuss what to expect from the markets. We take a holistic view of indices, commodities, and currency, including dollar as well. And it also comes with a two face-to-face consultations. Yes, you can consult with me. You can call up to me and I will do the analysis and do the predictions. Also, if you are stressed with any account, yes, we will also discuss that thing. So yes, book this webinar package and get the most out of it. Now on the daily, see the top here at 20, 35, 40. Since then we have seen it trading bearish, creating lower highs, lower lows. The highs of the channel somewhere here at around 20 or 2000, 2006 June. And that is why I say once it stays above 2010, you can say that the prices are reversing. As long as 2010 is not taken, we have to be watchful. It has to break beyond 2010 and then 20, 35, 40. If these two levels are taken, certainly you can say that the gold has reversed, and a rally towards 2100 and plus levels is what we will be looking forward to. But it is right now, it is a very distant levels from these prices. Stochastic is oversold here on the daily charts. It calls for it to reverse and retrace, but right now it is not showing much of the signs of bullishness. Why? You can see on MACD, we have discussed this thing earlier on MACD. This is almost the top levels from where we have seen reversal in gold prices. This time again forming the double top, the prices have reversed. Only thing is it is trading with too much of divergence, which calls for it to converge a bit. Means it can possibly converge, show couple of greener candles before dropping further. Even if it has to trade bearish, it can try to converge a bit before dropping further. This is one of the probability. RSI has dropped as well. So now looking at the charts and indicators, time for me to give you the trading levels and strategy. And yes, do visit the platform forexfunda.com or my free Telegram channel for more live updates on the markets. Now, considering this, I will recommend you to sell here at 1980 levels. Below 1980, you can expect 1975 plus minus levels here, close to 1975, or rather I will say 1975 and 1970. 2.5 as the first resistance zone and a very strong resistance zone. If the prices stays below 1972.5, today itself we are going to look at 1965, 67 as the next target zone, which is going to be a very strong support, and prices staying below 65, 67, nothing could stop it to drop below 1950, 40 zone. So that is the first part, that is for the sell entries. On the upside, I will recommend you to buy here at 1989, 90, 91 zone. Some point of time above 89, 91, you can look forward to 95, 96, 2000, 2002, and then 2010. If gold stays above 2010, consider that a reversal is coming, and we are again looking forward to 2040, 2070 as the near-term targets in this week, or probably by next week, these levels will get achieved. So take your trades accordingly. Like, share, subscribe, and comment. Do watch the next update before the US session as well. See you again. Thank you very much. Join my mentorship batch and signals channel and the webinar series as well. Thank you.